Hey everyone, me Kevin here. Yesterday we talked about this flight of investment bankers from traditional finance heading over to crypto-related institutions. And that got me thinking, okay, why? Why is this happening? And I realized there are three real reasons we're seeing a big transition from investment bankers going from traditional finance over to crypto. And it's very simple. There are three easy things that institutional investors can do with crypto that most of us don't have access to yet. Easy and quick price arbitrage, futures trading, and options writing. Basically, you have people who are really good investment bankers and can take advantage of price arbitrage, futures trading, and options writing in traditional finance. Go, wait a minute, we're trying to eke out pennies over here. Let's go over to the inefficient crypto space, which first of all is a lot more exciting for future potential. I mean, any white paper or even an analyst report I read about cryptocurrency is just mind-blowing. I learn something new every day, and I love that about the crypto space. The potentials, they're not infinite, but they're really, really vast, and I absolutely love it. But what I'm finding in my research is that a lot of analysts or even traders or hedge funds or investment bankers, whatever, they're taking advantage of the fact that at any given moment, you might see Ethereum Classic at $80 on one platform and at $100 on the other platform. And it got me thinking to myself, when have I noticed that before? And I noticed that with Doge, and I've noticed that with Ethereum. I've noticed these price discrepancies between Robinhood and Coinbase Pro or Binance. I've seen these different prices, or even Webull. And sometimes I look, and don't get me wrong, I'm not suggesting you buy on Robinhood, but the point is you can still compare prices. The point is you look at the different prices, it's like, wow, there really is a difference in the price. I mean, you could in some cases buy it for, I don't know, Doge I've seen priced at 57 cents while you could sell it on another platform for 64. It's really, really crazy. And then in theory, you could just do the reverse when it changes directions the other way. It's really bizarre how inefficient the market still is right now, but it does make sense. It really does make sense because we don't really have a centralized Bitcoin exchange yet. We've got maybe Webull's using their platform and trying to match buyers and sellers, and Robinhood's using their own crypto clearing firm, and then you've got Coinbase using their own folks, whatever. The point is, Bloomberg is reporting on this as well. Investment bankers are seeing fat frickin' opportunities to print tendies via price arbitrage, futures trading. So usually what they're doing is they'll go like long on a position on, let's say, Bitcoin, and then they'll short a futures contract because a lot of the futures contracts are in some cases overpriced, and you get this sort of convergence where you see the pricing of the underlying coin go up, and then you see futures contracts converge down, and so they're taking advantage of both of these things. We don't see a lot of that in retail, and they get to do options as well, calls, puts, you name it. Investment bankers have access to all these fancy tools that we don't have. And this is maybe an explanation for why is it that some of the crypto firms could pay you interest on your crypto, like BlockFi or Voyager, which you could go to metkevin.com/BF, deposit money, and you get up to $250 for free with BlockFi, or go to metkevin.com/Voyager and earn interest on your cryptocurrency, either at Voyager or BlockFi. Check those out. But anyway, it kind of makes sense because the investment bankers are able to print money with these tools that most of us don't yet have access to in the crypto space. Sure, we can get options on Tesla or Amazon or maybe some of the smaller companies, since those are expensive, like Apple options or whatever. We can get those all day long at Robinhood or Webull or whatever, but we can't yet get those crypto derivatives. And this is where the investment bankers are having a field day. And that could be part of the reason why we're seeing not only crypto be so attractive for investment bankers to kind of invade the crypto space, which is a good thing. It just brings more money to the space and leads to these price increases that we're seeing. But we're also seeing more and more companies plow into more and more ideas related to crypto, which means, again, more and more money flowing into cryptos. For example, Block.com, which is backed by Peter Thiel, Alan Howard, and Louise Bacon, they're launching a new crypto exchange, and they're going to try to combine traditional centralized crypto, which would be through like a Webull or BlockFi or Coinbase, with DeFi. Now, I don't know exactly how that's going to work yet, but they're planning to call the exchange bullish, and it's going to start with $10 billion in digital assets and cash, They're going to seed it with $9.7 billion in Bitcoin, which is somewhere around the time of this recording, 164,000 coins. They're also going to try to build out their EOS blockchain, but that one's kind of been losing interest lately. But the point is, Peter Thiel, Mr. Palantir, is basically going all in on Bitcoin here, which is like really, really cool. Then, and folks, I mean, we look at some of the other coins. I mean, it's just amazing, some of the growth that we're seeing. And I think a lot of it is coming because of this investment enthusiasm. Look, if you can make money on derivatives on Ethereum, why not try Cardano? Why not try Ripple? Why not try some of these other coins? And that's kind of what we've been seeing. So we're looking for an explanation. How stable are these prices? Hey, maybe they're actually stable because you're getting so much more sort of inflows of institutional capital into these spaces, trading derivatives, hopefully creating stability. Now, the concern would be that a lot of this is over-leveraged. What if you're getting rehypothecation? What of even stable coins? What if you're way over-leveraging on the cryptocurrencies because there's a lack of oversight in how much leverage is being used? We don't know. All of that could be true, and all of that could be leading to some of these prices. But folks, look at the run here recently, just in the month of May, in the last 10 days. Last 10 days, Ethereum Classic goes from about $35 to a price where it sits right now of $110. Folks, imagine a SPAC like QuantumScape going from $30 to $110. We'd be freaking out. We'd be all over this. And let's take a look here at, let's do a little bit of volume analysis here. There we go. Look at just the volume here. I mean, we really saw peak price volume somewhere around here, May 6th, May 7th. And that's, of course, when you also align the top price. This is why I always say look at volume analysis. And I would keep an eye on this. You start seeing a ramp here in volume again, this could be very interesting. So some folks are looking at Ethereum Classic right now as this maybe being a buy the dip opportunity. We just bounced off a support level here. It looks like around 104, 105. Sat there for a few hours. You know, we don't really have another support until you get to 92 and then you get to 74. But that's what happens when you get these parabolic runs. But you've got quite a potential run ahead of you here if we go back to the lid that we had before of 150. I mean, we'll see, but look, I'll take $40 on 110 any day because that's still like 38% or something like that. Quick head math, I don't know, maybe I was slightly off on that. But anyway, you get me pretty raw here. But Ethereum Classic, folks, pay attention to this. This is absolutely incredible. Then we've got Cardano. Cardano, first of all, if you hit all, okay, you're going to vomit because it's like a straight line, right? So you have to really, I mean, it's been around since 2017, right? So you really have, at least charted here. So you really, in my opinion, you should go year to date on these. And if you go year to date, which is what this chart is, you get a little bit of a better understanding as to how recent the run is and how stable it is. Cardano has had it still has a very beautiful uptrend here. I mean, if I go to TradingView, let me see if I can go out to year to date. Let's just go to week. That's going to get me a little further out. Yeah, actually, you know what? There, let's zoom in a little bit. No, let's go to day. We'll go to day. Okay, so we go to day. Look at the trend that we have here on Cardano. I mean, this is beautiful. Let's go ahead and throw in a trend line. Here we go. Let's just grab the lows here. Look at that. We almost have four touches on this line right here. I mean, this is beautiful. This is really a nice trend. What I'm going to do as well is I'm going to put in a moving average here. I'd really like to go ahead and put in a 50-day moving average. So let's put the 50-day moving average in here. There we go. So we've got our 50-day moving average, which is this line right here. You can really see we got a nice breakout off the 50-day here. I mean, we've been riding above the 50-day. We touched the 50-day at these low points here at 120. We actually broke it. And when was this? We broke the 50-day around April 23, and we've really been exploding off the 50-day since here. I mean, this is pretty bullish, I would say, for Cardano. This is another one. I'm going to go back to volume here. This is another one. I would look at these potential spikes as maybe bullish indicators for trends pushing Cardano. I mean, we've seen much higher momentum in Cardano before. We've seen 24-hour volume as high as 20 billion before. Right now, we're only at 6.6, so we got a potential triple in volume. with how many people have traded this in a 24-hour period before. So Cardano is another one that I would be paying attention to. And some of y'all yesterday mentioned, hey, Kevin, remember how you said that, and I did not know this, I think this is super cool, but I was talking about how one day in the future, just the top 20 or top 10 different cryptocurrencies, they'll all kind of be like Visa, MasterCard, Discover, where it doesn't matter what coin you use whatever freaking coin you want. The recipient just gets whatever they want. Many of you in the comments were saying, yeah, Kevin, that's actually a feature of Cardano's. I didn't know that. Look, I've just shared this with you as I learn it, and I think it's really exciting. So I mean, that is brilliant. That is very, very, very brilliant. And I would pay attention to Cardano. It's, I think it's number 6 right now. I believe it's number 6. Yeah, there it is, ranked number 6. So I would pay attention to Cardano, not bad. Now, we did also see have seen a little bit of bouncing over here at, XRP, although XRP has questionable maybe the reputation, but we've really kind of been bouncing along over here around what some folks say is maybe that support level right around the high 130 range, somewhere around here. I don't know if we're going to end up falling to this support around like 107. It's entirely possible. But here's another one that has been getting some attention lately. Maybe out of these, I mean, it's obviously ranked 7. Out of these, I would probably have Ethereum Classic and Cardano higher on my list. I would also consider Ethereum, although some folks, there's a belief that Ethereum could get over $20,000 soon here, that we might actually even in the future see a swap between Ethereum and Bitcoin. But the price growth here, the trend has been absolutely beautiful here just over the last period of time. Now, my only complaint with this is we had some insane price peak. We had this insane price peak right here on January 5th, which made it really, really difficult to kind of compare volume. So just get rid of January 5th when you're comparing volume, and then you'll actually get your volume bars back. And look at that volume growth on Ethereum. I mean, you are seeing the amount of volume growth on Ethereum pushing this price up. We are sitting right now at $60 to $66 billion being traded in 24-hour periods. And that's 2 to 3x what we've seen in March for Ethereum, and it helps us push that price up. And so that's why I'm kind of also paying attention over here to that potential for a triple in Cardano and Ethereum Classic in terms of trading volume, which we don't know exactly how far some of these could push up, but these are some of those I'm keeping an eye on. I think I'm going to go ahead and X out XRP, and I'm going to, for now, the ones that I really want to focus on are Ethereum Classic, Cardano, and Ethereum itself. Although Ethereum itself and Bitcoin, quite frankly, I feel very comfortable with those. I'd probably wait for a correction and buy the dip on those. But Cardano and Ethereum Classic, I'm tempted here. These look juicy for me. We'll see, though. I really want to track that volume a little bit more because we have seen that volume rotate to the downside at Cardano. It never really got back to that peak that we got around the end of February, early March. And so we'll see. Can we get that trend to push back in that direction? Can we get that price volume to head back in that direction? And so far, it looks like maybe a little bit of a slowdown the last few days, but we'll see. So definitely one I'm going to be watching for, another breakout here on. We did just have one in the last week. So we'll see what happens if we fall to a support, and then maybe we get to a new low in volume, which that might be another opportunity as you wait for that volume to dip to like $3 billion in volume, and you see if that aligns with the dip in the price, and maybe at that point you pick into some Cardano. So those are going to be some things that I'm paying attention to here. I do also want to pull up Elon Musk's tweet because it's very important, and I want to mention that eBay is now going to, or announced today, that they're going to allow folks to buy and sell NFTs. They believe that NFTs, non-fungible tokens, have reached a tipping point of credibility, trust, and adoption, and therefore they're going to allow folks to start trading them on eBay, which is really, really cool. Maybe that'll revive eBay's... actually, honestly, eBay's sold off so much in terms of eBay stock. I wouldn't be surprised if that ends up turning into an opportunity for people to say, oh my gosh, eBay's now an NFT play. Maybe that's something to pay attention to. Write that down. Let's put down eBay stock here. It's at $60, $10 above where it's been floating at. Not really seeing crazy movements on the announcement here. And eBay's been struggling a little bit throughout the pandemic. Not substantial growth. I mean, we did grow, don't get me wrong. But for an online retailer, it didn't grow near as much as other companies did. But anyway, let's hit Elon's tweet really quick. Take a peek at this. Do you want Tesla to accept Doge? We got 3.2 million votes here, 77.7% of folks saying yes. Really cool. I think it's really, really incredible. And folks, I have to say, the crypto market right now, very, very, very exciting. I am regularly doing more research on the crypto space, and I'm excited to bring you those updates. So if you like more updates on this, make sure to subscribe for more of these crypto updates. Let me know down in the comments if you want more of these sort of roundups. And folks, we'll see you in the next one. Thanks for being here. Bye.